You're looking to buy that first home and you're not sure where to start. We're going to answer that in this video coming up right now. What's happening, everybody? I'm Huddy, and in today's video we're going to talk about the initial first steps on what you need to do in order to buy that first home. We're not going to get overwhelming because that's really easy to do, especially if you're new to the home buying process. So let's get after it right away. That first step is actually finding and interviewing a good loan officer. It doesn't have to be the first one you talk to. You could talk to maybe 3 of them. Doesn't have to be with your bank, or it could be a lender, could be someone online, or someone that a friend or family refers to you. The reason why this is so important is because if it's your first home, even if it's your next home, you want to be talking to someone that has been around, that understands different situations in the market depending on where you live and what's going on with that market. So having a good seasoned loan officer that can help you work through your unique situation, whether it's financial, whether it's credit, or maybe a combination of both, is really important when you're going to get that first home, or even if it's your next home. So after you've spent time finding that loan officer and you've gotten with them, typically that loan officer, they're going to want to do an application on you. I know that can be super scary because we're going to ask certain things about you, that personal information that you may not be ready to divulge. But it's okay, because in this initial application process, what I like to call an informal application, it lets us look under the hood. The idea is, if you're going to get your car fixed, the mechanic's got to look under the hood. He can't just tell you what's going on with it by a sound that you might make or a sound that mechanic hears. So we're going to be asking for that information. We want to know things like, what's your name, obviously, social security number, dates of birth, where you're living, where you're working, how much money you make, and also what do you have for a down payment, if you have one even at all. Maybe it's down payment assistance you're after, but in any case, we want to know those financial pieces so we can better determine what you might qualify for. A big reason why we want to do this, I can't tell you the amount of times where people have called me and they think they know what they qualify for because they're monitoring credit online, and then they look at houses online and they have those little mortgage calculators to the side, and those mortgage calculators oftentimes build in very favorable terms. Interest rates that don't exist. They don't include mortgage insurance. They assume you're putting 20% down because they want to assume that payment looks really good to anyone looking online. They're trying to bring you in. Not a bad thing, but when you're talking to a loan officer and we gather your information, we're able to determine a more realistic picture of what you might be able to afford or budget when you're looking for that first or that next home. So the next big crazy thing that we're going to want to do, I know, we're going to want to pull your credit. The big scary credit pull. So the question of the day before we talk about that credit pull is, what credit score do you need to buy or to qualify for a mortgage? If you know the answer, drop it in the comment right down below. Again, what credit score do you need to qualify for a mortgage? I look forward to seeing those answers, and I'll respond to each one of them. So that credit pull, this is what we want to get after. There's a huge misconception about that credit pull. It's going to ding you, I don't know, maybe 8, 9, 10 points. There's so much information, misinformation online about credit pulls and, in fact, mortgages. Well, pretty much everything, there's a lot of bad information. The credit pull in our world, it's only going to hit you about 2 to 3 points in that credit pull. But more importantly about that, the reason why we want that, this is really important, is because we're going to see our scores, which are different than what you're finding online, so we can determine exactly what type of loan product you might qualify for. Those credit scores are going to help us determine what type of loan program you qualify for. Maybe it's conventional, maybe it's an FHA if you live in the rural place of the world like I do, maybe it's USDA. If you're a veteran, it could be a VA, or maybe you're looking at a loan where you can rehabilitate a property and then live there. There's all sorts of different financing options out there, but part of that credit pull is going to show us what those scores are, and if they're not quite where we need them to be, we can coach you up on how to get them where you want them to qualify for the specific mortgage product that you might want. The other thing that this credit pull is going to do is it's actually going to pull in the debts from your credit report from all 3 credit bureaus, which will allow us to really look at your debt to income. It's much different than what you might think, so it's important that we get those items when we're helping educate you about this process and determining what type of mortgage you can qualify for and the amount. Lots of times I've had people where they qualify for way more than they want to spend. It's not what they want for their budget because they have things that aren't considered into the credit score, like daycare. There's all sorts of different situations out there, and believe me, I remember buying my first house all those years ago. In my situation, I was married, I had 2 kids, and I was trying to buy my first house. We kind of maybe did things in a little bit of reverse, but again, there's all sorts of different situations. That's why this process is really important. The last thing in this, don't be afraid to talk to someone ahead of time. My favorite people are people that come to me when they're 6 months or 8 months out. 3 months is good, but if you're 6 months to 8, even 9 months out from when you want to buy that first home, that's fantastic. The reason being is we can really take our time and get you ready to buy that first house or even the next house. Oftentimes people get so excited. Spring happens, especially where I live. There's a lot of snow. So when spring hits, they go out and they check out open houses, especially since we're post-COVID. Agents are having those again, so you go get excited about a house, and then before you know it, you're trying to get pre-qualified and hurry. Maybe you don't qualify for the house, or odds are that house is already sold. So again, what we want to do is we want to get in touch with a good loan officer, start that informal application process so we can look under the hood, see what's really going on, then talk those numbers over with you so you understand what they are, what goes into your mortgage payment, and what you are comfortable with. Not only that, we have to look at down payment options. There are a lot of them. I'm not going to cover this in this video, but right now you have the very first steps on getting started on buying that first house or the next house. If you want to see more videos like this, smash that subscribe button, ring that bell, give me a like. Don't forget, drop a comment on what credit score do you think you need in order to qualify for a mortgage. Thanks for checking out the video. We'll see you at the next one.